In this video, I will show you a strategy for the Bitcoin which I use on the hourly time frame, and I call it the VAM. And for this strategy, I have 3 indicators as entry rules, and I have 1 indicator as an exit rule. I have a stop loss and a take profit. So I will start with the first one. I will open a new chart window. I will right click and go to template, and I will select the black background, and then I will change it to hourly chart, and here we go. So the first indicator that I will insert on the chart, this is the volumes. I go to the volumes group, and the last one is just volumes. Click on it, and as levels I will add a level of 5,300. And I click on OK, and you will see the volumes indicator below the trading chart. Here is the level of 5,300. So the entry condition to buy is when we see the volumes crossing the level line upwards. Okay, for example, you see here it is crossing it. After that, again it is crossing it upwards, and this is our entry level, or simply when the volume increases, but we have an exact rule using the 5,300 level. And we have 2 indicators as confirmation. The first one is a moving average with period of 31. I go to trend and I go to moving average, and I will set a period of 31, and I click on OK, and here it is. So we want to see the moving average rising to have the confirmation. Okay, so when the moving average is falling, like this case over here, if we have the break, as you see right here, we have the volumes crossing the level line, but already the moving average is falling down, so we don't have confirmation to buy. And the third indicator is awesome oscillator, which needs to be rising again. Indicators, and I go to awesome oscillator, and I click on OK. It doesn't have any levels or parameters. It's formed by red and green bars that are going above and below the 0 line. Alright, so the confirmation here is that we need to see the awesome oscillator rises. Alright, so one more time, we buy when the volumes crosses the level line upwards, but at the same time we need to see the moving average rises, and we need to see the awesome oscillator rises. Doesn't matter, is it below or above the 0 line. So for example, at the current moment you can see that we don't have it crossing the level line. It just stopped there, and we don't have the entry. So let me go back through the chart, and now we are on H1. Okay, make sure you follow the first 2 strategies on M15, and the third one is on H1 chart. And I will try to see some examples with confirmations, and as well I will try to see some examples of losing trades, because with every strategy we have losing trades as well. Keep that in mind, and this is very normal, but obviously I include in my courses the strategies that have more profitable trades than losing trades, or overall they have profitable equity lines for the moment. And here I think we would have the confirmation. You can see very clearly when the volumes crosses the level line that we have the confirmation. Okay, the first cross is right over here, and then we have another one here, but at this time the oscillator is already falling. So let me zoom it so we can see a little bit better. Here it is on the right side, and the first time we have the cross is at this bar over here. The volumes crosses the level line upward. Now on the opening of the next bar, we are taking the trade because the awesome oscillator rises, and as well the moving average. And again we take the trade when the new bar opens. Okay, so here When this bar is closed and the new one opens, we see that we have a cross. And on the opening of the next one, we take the trade. And what you need to keep in mind here is that when a new bar comes, the volumes start from the ground. So if I go to the current moment, you see that the bar opened about 8 minutes ago and it starts to increase the volumes. So when a new bar opens, it starts from 0, and then according to the volumes that we have, it will increase. Now here is the entry. This is a long trade that I saw over here. I will put the line exactly. Here it is. So this is the cross. And on the opening of the next one, we take the trade. We don't know if on this current trade there will be volumes higher than the level line. The signal is with the previous candlestick. This is very important to note. And at the same time, we have the moving average rising and we have the awesome oscillator rising. So we have the two confirmations to buy. For this strategy, we have a stop loss of $215 and a take profit of $240. Let me put the lines exactly. The entry is 10,362, take profit of 240, which will make it 10,602. Okay, somewhere here. And then we have a stop loss, so let me make the stop loss red, and I will drag it $215 lower. So we have entry at 10,362 minus 215. This is 10,147. If I'm not wrong, 10,147. All right, here it is, 47, 45, 49, right here. Okay, I'm trying to put it exactly, but it's hard because I am on the hourly chart. So it's 10,147. Okay, I'm not calculating the cents, just the dollars. But as I said, if you are doing actual trading, you need to calculate it obviously very, very precisely. All right, so this is the entry. You can see very clearly what happens. This is an aggressive move and the price hits the take profit of $215 very quickly. And we are out after 3-4 hours with a great profit. So this strategy indicates the volatility or the volume, and it uses the volumes indicator, and it uses confirmation of moving average and the awesome oscillator, and it's really a great strategy. Now we have an exit condition as well. This is with the envelopes. So let me put the envelopes. So with the other strategy we had the envelopes as an entry, but here it is an exit, and I will keep it both aqua color, but here I have period of 24 and deviation of 0.80. I click on OK, and you will see the envelopes going upwards together with the price in this case. And the exit rule here is that we need to see the bar opens below upper band after opening above it. So pretty much the same thing. We want to see the price outside the band, and when it gets inside and we see a bar opening, this is our exit. In this case it would happen right here. Okay, we enter, the price goes outside the envelopes, and on the first bar that opens inside the envelopes, we take the profit or we close the position even if it is on loss. But with this example we had the take profit hit first. Alright, and here it's very important to note that we are selling with the opposite confirmation from the awesome oscillator and from the moving average, but the volumes stays the same. Okay, so when we sell, I will remove all of the lines from this example. When we sell, we use the volumes again crosses the level line upwards, because we are looking for the volatility no matter we are buying or we are selling. But for the selling, we need to see that the awesome oscillator falls and as well the moving average falls. Right in here, I think we have a great example of a sell trade. Let me put the mouse on it right here. Okay, I'm used with the strategy, so I see it very quickly, but I'm sure after some time you will get used with it. And here is the first cross. Okay, you can see the volumes, the value is 5,503 on the closing of that bar. On the opening of the next one, we should take the trade. And in this case, we are selling because the moving average starts to fall. If I put the mouse on the moving average, you can see that on this bar, the value of the moving average is 10,924.80. And on this bar, it is already 10,922.97. Okay, it's a smaller value. Same thing with the Awesome Oscillator. Here the value is 23,979 and here it is 9,207. Okay, it's falling. And this is a sell trade. You can see very obviously we would take a great profit. First with the take profit and second with the exit condition from the envelope. So the first bar that opens inside, I think is this one. So here we would be taking our profit if we use the exit condition. But first, I'm pretty sure that the take profit would be $240 lower. So the entry is at 10,995 minus 240. That would be 10,655. Okay, somewhere here. Okay, this is where we would take the profit with this short example. And as I've promised, I want to show you some negative examples. So right over here, I think we have one. Okay, here it is. So at this bar, at the opening of this bar, actually, I will move the line so you will see it clearly. Right over here, we have a cross from the volumes. Okay, you see this bar, it's a big bar, the volumes is above 5,300, and on the opening of the next one, we should be buying because the Awesome Oscillator rises and because the moving average starts to rise. And here it is rising. You can see the value 10,453. Here it is 10,460. So at this bar we are buying, but you see what happened after that? The price goes down and we would hit the stop loss. In this case it would be $215 lower, which is at 10,328. Where is it? Somewhere here. Yep, right here. Here we will have the stop loss. So that's a negative example or a losing trade, which, as I've said, is quite normal with every strategy. But these strategies that I'm showing you, I have tested for quite a long time and they have so far more profits than losses. And I always improve them if it is needed accordingly to the market conditions. Okay, so if it happens that you have losing trades, and it will happen no matter you trade manually the strategies or automatically with the expert advisors, don't panic. This is normal. The strategies have their losing periods, but as I've said, so far they have more profits than losses. And this is why it is very important to have a good money management and to risk small amount of your account. But this is something that I will be talking about at the end of the course. Alright guys, so this is the VAM strategy. This is how I call it, because I use volumes, moving average and Awesome Oscillator. So it is VAM. This is how I have named it because of the 3 entry indicators that I've been using, and I have envelopes as an exit indicator. Alright, you will find this PDF attached to this lecture and as well for the others. And one more time, when you are taking this course, the values could be different because the market changes, so the strategies change, and I do my best to improve them all the time. So thank you for watching the video, and I will see you in the next one where I will be showing you another strategy for the Bitcoin for H1 chart. See you there.